We have been preparing you guys for weeks for a Q3 earnings apocalypse. It is upon us with Microsoft and Google, down both over 6%. But the SPOOs, the market, is down 0.72%. What are they buying out there? What is the rotation? Is it buy the dip or did they already buy the dip? We're going to figure this out on today's pre-market prep show. And we're going to bring on Michael Hewson, Chief Analyst at CMC Markets, to get a view from across the pond. Mitch, let's figure this market out.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, guys, you see it on the screen. We're down 28 handles here at 38.42 and a quarter, about 20 handles off the pre-market low, and really only about 10 handles lower than that after hours print. So we're down, but not out yet. We'll see what we can do with that holding that pre-market low. The buck is down. That might be helping things out, down 83 cents at 110 even. TLT has caught a bid. Couple days in a row, up 61 cents at 95.70. Crude having a good day, giving a boost to that rotation in the oil stocks, and a constant rotation, up 94 cents at 86 and a quarter. Maybe your gold stocks are up. Gold up 16 bucks, 16.74. Silver up about 25 cents at 19.60. Bitcoin residing in the 20,000 handle, up 310 at 20,615. And Ethereum futures are up 34 bucks at 15.29. Let's bring on Triple D, who is witnessing this wicked rotation as we speak. Triple D, there's some stock. I mean, the first thing I texted you this morning was, okay, why aren't we down like 50, 60 handles? I'm looking at Apple down 0.8%, Microsoft and Google both over 6, Amazon 3, Tesla down 1.42. What is holding this market up?
A lot of stocks holding this market up, and I tweeted it last night. You could see it clearly after hours. It started right on the Microsoft report. They were hammering tech, but they started buying a lot of other stocks, and you could see it happening. So, I was positioning too. I started buying value stocks for my overnight trading account and shorting tech. That was the play. Short tech, long, all kinds of other stuff. So if I'm looking this morning, banks slightly higher here, utilities higher, looking at the cruise lines, looking at the airlines, looking at the casinos, looking at the oil stocks, looking at the staples, looking at the cyclicals trading higher, looking at the IWM trade significantly higher. We do see this on the major tech reports sometimes. I can remember from the last quarters, but the rotation is very pronounced here this morning. So you're seeing a lot of stocks actually trading green. If I look at my screen right now, just looking at the 200 stocks that I watch, I'd say over half of them are trading in the green, which is next to incredible with the S&P down this much. But you got to consider the S&P sell-off is all tech. I mean, all tech. You got Microsoft down 6%. You got Google down 6%. You got Meta down 4%. You got Apple trading down 1%. I mean, that adds up to more. So they have to buy something to make it all add up. If the S&P only wants to be down 0.73% and all those top components are down 4, 5, 6%, then they got to buy something else to make the math add up, and they're buying the other components. And the other components that are non-tech are the ones getting bought, because tech is an absolute mess here this morning. Even small tech, it's still a mess here this morning. But mega tech is the real mess, and a lot of stocks are actually holding up really well. So rotation again, keeping this market afloat.
So is this it? Is this it for mega tech? Is this it for computers? Is this it for technology? I mean,
I wouldn't say that, because just looking here, and obviously, we don't have a crystal ball or anything like that, but just looking, it's good news for this market that the S&P is holding up this well. It's good news that, you get a major warning from Microsoft and the market seems to be taking it pretty much in stride. You can say, what are you talking about, Dennis? We're down 27 handles. The tech stocks are a mess. But there's so many other, it didn't spill over into everything. It just kind of spilled over into just tech. So I think that rotation being this pronounced is a sign that there's still a lot of people and a lot of algos that want to be long this market.
I got a question for you. And let's go forward. Look, I'm going to throw a really tough question at you. Okay.
Go ahead.
We've been following the top components in the S&P for like 100 years now. And we got Apple, right? Microsoft. I like to combine the two Googles, and then Amazon, and then Tesla. Okay. So in a year, okay, are these going to be still the top 5 components in the S&P? I mean, is this like the rotate? I mean, we know it used to be Exxon Mobil and GE and CVX and JP Morgan and Procter and Gamble and Visa and the 8, 9, and 10 rotate in and out. Nvidia has been falling. Meta's about to fall out of the top 10. I mean, are we in for like a general, generational rotation here? I mean, is it still going to be the big guns up there? And Mitch, you weigh in too, because I don't have the answer.
Oh, it's a fantastic question, Joel. And I don't think anybody has the answer. I mean, they're so far ahead. Maybe you can bring them up. Can you bring them up? Is there a way that you can show the percentages? Because they're so far ahead that it's going to take a while to take those out. But can you have this 10-year tech bull run rotate? And I never considered that a possibility. Rotate into all these forgotten stocks, the stocks that really, a lot participated, but there was a lot of stocks in the last 10 years that didn't participate nearly as much as the Microsofts and the Apples and the Googles. You're talking about stocks that are up 1,000% in 10 years. There's a lot of stocks that aren't up nearly that. So could you have a catch-up trade with all the value names, all the cyclicals, the stuff that hasn't, energy for that matter, obviously as well? I don't know if anybody has the answer to that, but it's possible that you could have a prolonged bear market in tech, yet the S&P holds up well if that rotation still kicks in.
I have one here, Joel, if you want.
I threw Joel under the bus to show me a chart. I guess it's your theory, and I'm like, show me a chart.
I got one for you.
Show me a chart.
Here you go.
All right, mine's coming up. I just want to know that I'm like, my internet is.
You want to know percentages, right?
Here, so if you lose me, you lose.
Yeah.
Okay, so we're seeing it now. Apple 7% of the S&P. I don't know how up to date this one is. The Money Mitch found, but it gives you a good feel.
Exactly.
Microsoft 5.7, Amazon. So the top. So Microsoft and Apple are 13%. That's incredible. 500 stocks make this up. Microsoft and Apple 13%. The Googs, you combine them, so they're over 3%. Mm-hmm. Amazon's over 3%. Tesla's moved in 1.7%. And you got Burke, and then you got some sneaky ones coming in like J&J and UNH because they've held up fairly well in Exxon Mobil. But, you think about, the underperformance even of the banks over the course of the last decade. I mean, we've come up from maybe 2008, after the financial crisis. But, some of these stocks were much higher. Like Citigroup never came back. Citigroup is still a fraction of what it was. And those stocks aren't coming back. But could there be that rotation? Could everybody get screwed because everybody's portfolios are so heavily weighted tech?
Exactly.
Could we actually see, and in the last 6 months to a year, we have seen exactly this, energy picking it up. So this isn't like a new phenomenon. Does the phenomenon continue though? Everybody in the whole world, like you go on CMC, is banking, eventually tech's the place to be. We're moving to technology, everything's technology, everything's all about that. But
how long will that eventually be, right? I mean,
how long does this last?
Exactly.
How long does this last year move? Because it's a full move in the last year. How long does this move from tech to cyclicals to energy to banks to defensive to utilities? Not maybe utilities because they do their own thing and they've actually performed pretty well too. But there's an argument there. There's an argument there, Joel.
And not to make things better, but of course, we've been talking about the tensions between China and the US keep increasing in tech, right? More licensing issues, more kind of control on exports. I think this is not going to help overall tech. But I mean, I think that in the long run, of course, you want to probably be in tech, but How long down the line is that? And of course, we also would probably want to see these interest rates start turning around to help these growth stocks.
I mean, there's some good arguments that maybe you don't want to be in tech, though, because again, if you go back to valuation has ruled in the last year. It wasn't used at all, basically, 2020 and 21. It was all story. In the last year, you've seen lower PE stocks hold up fairly well. I mean, the drugs are forgotten. The drugs have been forgotten. You know, a lot of these drug stocks trading 7, 8, 12 times earnings, like Gilead, completely forgotten. Is this their time? Is this market actually going to start to really look at Gilead, the long-term chart, Joel? Just making it.
I got it. Yeah. Yep.
You know, but it's done nothing. I mean, it's done basically nothing for 5, 6, 7 years. Yet it still makes money. So, but it's not just Gilead. You know, there's a pile of other ones too. So I'm just making an argument here that could be this rotation that we're seeing today. And the rotation, rotations just started. It started really, 9 months ago. But there's an argument there that this could continue for the foreseeable future. So, I mean, I've had a lot of value stocks in my portfolio. Yours too, Joel. We probably actually would benefit from this, although tech is a lot in our portfolios too. Although I've hedged a lot of the tech and sold a lot of the tech last year, as I was, talking about, the coming, recession. So that's worked out okay. But there's a lot of stocks here that they're actually outperforming. I mean, the XLV, even going to that, look at the XLV. It's starting to roar back. We're not that far from all-time highs here.
No, not at all.
There's hidden bull markets in this nasty bear market. And it's clear today which stocks those are. It's all the stocks that are green on your screen right now. Those are the ones they've been buying on weak tech. So maybe it does continue.
I mean, I think you had like the ultimate tech world, right? With the pandemic, like if you didn't have, everyone technology, the rush into technology, buying computers to work at home and everything. And, I was just thinking about, like the economy, like, is it tech, do you want to be going into the tech sector right now? Do you want to like actually be able to, have a trait where, people need it, and I'm, the trades, getting people to do actual work around the house, construction and things like that. I mean, it was tech for so long. I don't know. I mean, it's interesting where it's very pronounced on a day like this. But in let's go to the Google report first, because I've been thinking about this for a while. Like Google, like they split the company and they changed it, and because they were going to expand, right? And the reason they called themselves Alphabet is because weren't they going to have a company like of every letter of the alphabet?
Is that what the reason was for originally? Is that really?
Or did I make that
No,
up?
I think you're onto something. I think that I did hear that too. Maybe me and you just dreamt that up, but
you just getting lost in the alphabet soup. That's what I would say. Alphabet soup here. Q3 EPS coming in at $1.06, missing the $1.27 estimate. Sales at $69.9 billion, missing the $70.91 billion estimate. Q3 Google search and other revenues were at $39.53 billion. Google Cloud revenue at $6.86 billion. And Alphabet's total quarterly revenue growth getting crushed from 41% to 6%. YouTube ad revenue at $7.071 billion. YouTube revenue declined for the first time since Google started reporting the division earnings separately.
I'm long Google long-term account. One of the tech positions I did not hedge. I've been long it for over a decade. I'm going to hold on to it. I got to have some tech exposure, and I still like this one, but it's come off significantly. Valuation's reasonable. It's going to be a victim if we do go into a recession, and it's going to be a victim if we're not spending as much on advertising, and obviously Google's a huge part of that. I just don't know if I think, that I need to sell my Google, that there's, major problems coming here and it's going back like $50. So I'm sticking with Google, but do you come in to buy at the lows? Yeah, I mean, you could. The low of the move is 95.27.
Right,
that's the level it's got to hold, because when stocks are making new lows, you got to go. And new lows on the move would not be good for this name. I'm not sure if they're going to come in and buy the dip on these. It's a really tricky day because the market's holding up so well. It makes you think, well, maybe eventually they just come in and buy the dip on tech too, and this market closes green. I could see that happening. The buy the dip mentality is there. There's money managers that are coming this morning licking their chops saying, I need some exposure. I've missed, the recent 2-week run. Now all of a sudden I get a shot at Google near the lows. I get a shot at Microsoft, over halfway back to those lows. There's an argument here to buy the tech stocks on the pullbacks. I don't know if I'm in that camp or not yet, but I want to see after the open. I might be.
Street leaning the wrong way into this report because we had a strong market, and so that moved the last 3 days. That absolutely crushed people, right? Oh, they're finally going to have a good report. I mean, blow it away. So that exacerbated. That made this big straight down line in the first right after the report was released. You've given back, about a half. I'm not going to make any calls on the low of the move here. I'm just when I look at the 15-minute and I look at the 60 here, 99 just sticks out to me. And we're below 99 right now. There's a seller there. If they could take out that seller at 99, then I'll look for it to rally up into yesterday's, more into yesterday's range. As long as you stay under 99, I think, the bears are still in control here. So just, focus on 99 for Google. Right now, it stands as resistance down 687 or 6.5%.
I'll be watching for the takeout on the daily pattern. Daily pattern looks really bearish for me now. You got the 3 highs, 3 resistance. Yep. That's exact pattern that I look for all the time. Now we shouldn't get through that resistance. So that's another level maybe for the bulls to watch. If we could get back towards, let's say 104, then you get back out of this bearish pattern. But the daily pattern now has 3 highs all around, let's say 103.80s, 104. And with that, I think it's a completed bearish pattern. Now I'd look for it to take out the lows. We'll see what happens. All right, let's go to the next report, of course, that shook everybody up, which was Microsoft. Let's go to Microsoft and talk about what's going on there. Q1 EPS coming in at $2.35, beating the $2.32 estimate. Sales at $50.1 billion, beating the $49.84 billion estimate. Revenue for Microsoft Cloud segment was at $25.7 billion in the first quarter, up 24% year over year. More personal computing slowed down in the quarter, slightly missing expectation. Azure revenue grew 35% in the quarter, compared to 40% growth in the previous quarter. Xbox-related revenues down 3% year over year, and Windows OEM revenue down 15% year over year.
Last quarter, Microsoft reported was down initially, and then the conference call happened, and they ripped the stock higher on the conference call. The exact opposite happened this quarter. It was down, well, not the exact opposite, because it was down initially, so it's setting up, and I was like, are they going to do the same thing? Then the conference call came out, and the guidance wasn't good this time, and they hammered it. And I mean hammered it. It was during the S&P closure between 5 and 6. So you won't see it on the futures, but the SPY starts to get hit, obviously, during that time. And they hammered, you can point to it, Joel, like a 245, Microsoft was trading conference call, and boom, they hammered this down to 231 in about 10 minutes. Like, they just hammered it. And it's bounced. It was a little overshoot 231, but it's holding down here. So it's not like they're buying this thing right back. So they're skeptical. This is a big sell-off. Microsoft is not that far from the 52-week low here now. So obviously that comes into play at 219. We're not going to see it today, but it's the next level you would think about if you want to really get bearish. I do think there's going to be money managers that come in and buy the dip, for the simple reason is that the last, 2-3 week rally that we've had overall, I guess you could call it a 2-week rally, that there is money managers that are just looking to get back in. And Microsoft and Google are 2 names they'll be looking to buy. So that makes me not want to short it in the hole.
Oh, yeah.
And I'm very curious, after the open, what's going to happen. So
you don't think they were already in?
What's that, Mitch?
You don't think they were already in before this report, leaning bullish?
I think there's some people in leaning bullish, but I think there's a lot of money sitting on the side still. I think I'm sitting on the side still. Like, I think I'm pretty typical where I've got more cash than normal. I don't have any Microsoft. Do I need to put that to work? I'm not putting it to work at 24 times earnings. Mm-hmm. That's still what it's trading at. It's not cheap, but so it's not my cup of tea. But would I buy Google if I didn't own it? Maybe. if I'm that money manager, though, that, you don't want to get left in the dust, because it's one thing when the market goes down and you're all losing, but it's quite another when the market goes up and you're not making as much as the other guy. That is the real fear for a money manager that's not managing their own money. And I mean, that's the majority of the money out there. That's the truth. They're not managing their own money. They're managing fund money. They're managing, ETF money. They're managing, well, not so much ETFs because they're just chasing, but these funds, the money managers, their biggest fear is to underperform the next guy. So I think if they're sitting with some cash, I think that they'll be putting it to work on the pullbacks. I don't know if they go to the leader Microsoft, but I still think this market could close green today.
Boy, oh boy, as good as that 99 number was in Google, 235 is the number in Microsoft for a couple different reasons. I like to see, confluence. You had to move, let's call it 220 to 250. That's halfway back, right? At 235. Also, you got a series of 4 lows right in this area, right at 235. So after the big boys missed the pop off the CPI low that day, then they stepped it up at 235. We're trading under 235 right now, but that's my level of control. It's halfway back. If you thought you missed out, buy the dip, 50% retracement. Not only am I going to be watching 235 today, but I think moving on, if the bulls can't establish okay, 235 bid, we're holding 235, we're going to work our way to 240, then I don't know. I think you prepare for, I don't know, the next daily low comes in at 228.34. I don't think we're going to get to see that today unless the market completely craps out, which is we're weak now. The tech is starting to overrule the buying in those other things. We're down 33 handles, but 235, keep your eye on that for Mr. Softy.
Yeah, I would be stunned if these can come back and get into the green.
Yeah, Dennis, I don't know your green call today. That's
okay, stop. Because people put words in my mouth. I never say anything about Microsoft going green.
No, I didn't. That's not what I said.
That's not. I'm saying I think the S&P could go green.
The market overall.
Yeah.
I'm just probably not
because it sounded like and this is what happens, and it's kind of my pet peeve. Maybe you didn't mean that, Mitch, but I'll say something and people hear what they want to hear. When you're talking to 5,000 people, or and we get 5 to 10,000 people that actually chime into the show a day. There's always somebody that hears what they want to hear. They're half listening. So they're like, Dennis just said Microsoft can go green.
No. I said that's why I said it would stun me if Microsoft could go green today.
Yeah, and I did not say that. I said the S&Ps are down 30. I'm looking at the IWM trading up a buck, and I'm saying, can the rotation pull this whole market green? I think so. I think it could. I'm not saying it's gonna. Nobody has a crystal ball. And again, this is the toughest market to call. The toughest market to call that I've possibly ever seen. So it's about, again, going back to that Goldman Sachs guy, I keep saying it. He was saying this market, nobody knows what to do. We are in the same market. To call this market day to day is almost impossible with, using the Tommy Lackey term, with the tape bombs that happen. And we got one last night with Microsoft. You don't know what the next tape bomb is going to be. It could be positive news. We have so many balls that are juggling here. So that's why, to Mitch's point too, he was saying yesterday, it's a day trader's market right now.
Yes,
day trading. Because even if you're in intraday, you can avoid the news to a certain extent, or hedging yourself out. I hedge my overnight positions out. If I'm getting long a tech stock, I'm getting short another tech stock. If I'm getting long a Chinese stock, I'm getting short another Chinese stock, because I don't want to be just boom, all in China and falls 15% on me in one day. So, that's the way that I'm playing this, is still market neutral. From listening to this show that, I bias myself a lot of times. I try to make calls. I love making calls. I'm not going to go out on a limb here and say, that we absolutely are going green. I'm saying I wouldn't be surprised. So it wouldn't surprise me if we sold straight off. It wouldn't surprise me if we go green. This market is trying to find a reason to buy it, though. You can kind of feel that. So I'm being cautious with my shorts right now. But I'm not saying I'm necessarily just coming in here and buying. And I think Microsoft could bounce back a bit. I think there's zero chance Microsoft, can bounce back $15 here, even in the next couple days. So
let's
again, you got to pick
going.
your spots.
Let's go.
Yeah, I just want to say
going.
one
Oh,
general
go ahead.
thing. When we were talking the last couple days about the rally and the S&P, and I mean even in Coca-Cola yesterday, right? I mean that thing, opened up near $59. I mean, and we talked about, this market has been giving you second chances, right? There has been some pretty what you got to analyze today is, you missed out on the rally. We're, over 300 handles off the low. Is this the little dip? It's not much of a dip considering we've had a 300-point rally. This is or more than 300, right? Because we got to 3870 yesterday.
Show that S&P overnight chart here.
Okay.
They're showing Coke, and nobody gives a crap about Coke.
You want the spider or
no,
the
show the
S&P?
S&P futures overnight because there's so much action in the S&P futures overnight.
Exactly. That gives
This
us
is
a
the
little bit better.
15-minute. Yep.
Yeah.
Yep.
So so we take
Can
it
you make
back
that
to the
big?
4 o'clock close where we got hammered, obviously, off Microsoft and Google.
There's
We've
the
been trying to claw our way back here. We never got to scratch, did we? We never got to scratch, right?
No. That's way up there. I mean, I'd be surprised if we saw a scratch today. That's 30 handles away.
Yeah. But we've got half of it back.
Yeah.
Which is pretty impressive too, from the overnight lows. Maybe not quite. At one point, we had over half of it back.
We did. We're halfway back. And when I contacted you this morning, and then we were up like 8-9 handles from here, and I'm like, are you kidding me? With all this tech being down like that. So right now we are halfway back. The low was made. So this is a 6 p.m. open. So they hammered it. We caught. This was just about 11 o'clock at night, or this is 10 o'clock. So this is 9 o'clock at night. And then this is the drift overnight. Europe opening here. Buyers coming at 4 a.m. buy the dip. We actually got within like 13, 14 handles of unchanged here, and that was at about 4:30 this morning. But let's do some more earnings reports here because we got a lot. Which one do you want to do, Mitch? You
Everybody, please put your seats in the upright position, strays up, because Boeing is about to take off. Let's talk about Boeing here as they come in with their report.
That was one of my favorite Mitch moments since he's.
I'm trying to get better, guys. Trying to get better every day.
Mitch is solid.
Q3 EPS coming in
yelled
here
at
at
him enough,
a
Dennis.
loss
You
of
yell at him more.
$6.18.
No,
might not compare to the 7-cent estimate. A little bit off there, about $6.11 on the EPS. So let's talk about that. Sales at $15.96 billion, missing the $17.83 billion estimate. Boeing reported charges in its KC-46 tanker and the Air Force One programs. Looks like it took a $3.3 billion quarterly loss in that area of their revenues, and definitely not what they wanted to see there. EPS coming in at a loss of $6.18, and it's up. Well,
the algos hammered this on the initial print, and then they're like, "Oh crap, this is non-tech. This is not the day to hammer non-tech." And then they bought it all the way back up, and now they're realizing, "Oh yeah, but the earnings are really bad." So it's starting to sell off again. On a normal day, Boeing gets hammered on this, but because it's non-tech, and today algos are buying non-tech, that's the only reason it bounced back. I'd use it as a selling opportunity here. This quarter was a mess. But with that being said, it's non-tech, and non-tech is back in favor right now.
Pass on this one.
Tough.
Mitch, you can do the technicals on this one. I'm not even.
All right.
I'm not even going to give a level. I mean,
I just sell her 150. That's where it kissed pre-market. It kind of stands out. It was the high back on September the 21st using the Joel Elconin levels theory here. 150 major resistance for BA next stock, because we don't really like this one from a calling perspective. Tough to call this one.
The one thing I would say is this has had an 8-day green streak. Might be the 9th day, it might not be ending green, right? I mean, 8-day green streak, sometimes things start turning around. We'll see what happens there. Let's go to one more report. I think we can get in before our interview. Excited to get towards that. Let's go to getting the Chipotle ready. Who wants their burritos? Let's talk about it. Looks like Chipotle coming in with adjusted EPS at $9.51, beating the $9.16 estimate. Sales at $2.2 billion, missing the 2.23 billion estimate. Chipotle Mexican Grill says it experienced minimal resistance to price increases in Q3. It did say, though, in Q3, they're seeing a widening trend by income levels, right? Lower income consumers reducing frequency, and higher income, of course, coming more to purchase frequency. So what you're seeing there, of course, is them calling out the consumer, showing that the consumer is starting to show a little bit of strap for cash, but of course, those high-end consumers still lining on up for their Chipotle, and it doesn't seem too bad. Get a little side of guac while you're at it.
Oh, the algos. Oh, those algos. They just like buying stuff. But again, you can say, oh, Chipotle is non-tech. Chipotle is high PE, though. That's, one thing. I throw actually Chipotle into the tech bucket a lot of times when I'm hedging it and doing different things.
Really?
It's high PE, because it's high PE.
Because it's so high PE. Wow.
Yeah, it's like low PE, high PE to a certain extent sometimes. And, high PE, not the day for high PE here either. So anyways, but it's obviously the guidance or something on the call because it was up for a bit and then they got hit. So looking down here, it's got hammered back. I mean, obviously sell the rip worked well here last night. Now it's a tough call because they already had the rip. Sell the rip worked. It was higher PE. It's back down.
What I can tell you guys is not going to help you at all. And I would have said, resistance, right? But that's like a 100 and 1600. I'll keep an eye on that. Keep an eye on these three highs. If 1587, we're not too far from that. 1588, wow. Boom. I mean, there's what the bulls did 1591 yesterday. So that's the only good number I could give you. If they could bust it through there, but man, that's major resistance, wide open on the upside. Where to buy this thing? I don't know. What yesterday's low is being, you're still looking at your 2-day low at 1538. But another tough one. The other one too with the CMG, and it's not a reason, like if their stocks are short, not too short. I mean, when are they going to come out with a stock split? One of these days. And you know what I mean?
Split the burrito, man. Just cut it in half. Come
I
on.
ate there once, and I wasn't too.
They like the high price stock. It's the cool thing to do.
It's a cool thing to do.
Okay. It is.
Well,
cool thing to do
one
now.
thing it does is it avoids that like cult-like following, right? And it avoids all those kind of meme plays out there. I think that some stocks try to avoid all that risky situation. And this is clearly one that it's avoiding it. Let's do one more. We can sneak one in since we're doing a lot. Let's keep it rolling here. Let's do Kraft Heinz. I said it right.
There we go.
Right. Kraft Heinz Q3 EPS at 63 cents, beating the 57-cent estimate. Sales at 6.5 billion, beating the 6.27 billion estimate. Kraft Heinz did reaffirm full year 22 organic net sales growth of high single-digit percentage.
I had to take Spencer to the bus. I got an intruder here, so
she's
still sick, so she can't go to school, and Mommy had to take the boy to the bus stop. So I've got her for about 2 minutes on my own, and she burst.
The price is right. Come on,
say hi,
down.
Natalie. Say hi.
Hi,
this is
Natalie.
what 5 days of sickness looks like. It's a little bit rough.
Okay.
Okay.
You hang in
Okay,
there,
you gotta-
Natalie. You hang in there. Go get your toast.
Yeah. Go
It's
make
all
toast.
about the
Hey,
toast.
Dennis, you got to quit doing her hair, man.
Isn't
I
that
know,
nice hair
this
she's got
guy.
today?
This guy thinks he's a hairstylist now.
Okay, I'm gonna take one out of Dennis's book here, and I'm gonna say if you're buying this at $38.50, you're doing it wrong. Because that's where this thing, that's how much it moves in a month. And so wow, big pop, pulled back to 37.80. Still a big this is still a big move to the upside here. This 38, I don't know. I'd be more to be inclined to buy her in the lower 37 handle. 37.18 was yesterday's high. I'd be more inclined to try and buy it in that area than trying to pick a spot to sell because there's not much up here. 38.48. If you were looking at your September 2nd high, you would have got a nice trade off. But boy, oh boy, big move for Kraft Heinz.
Again, benefiting directly. And I can say this rotation, when you're in the actual queues, and Kraft Heinz is a member of the 100 QQQ, you have seen those stocks directly get benefited from the rotation to non-tech. So this is all ETF effects to a certain extent. Obviously, the company, don't kid yourself, the earnings matter. But there's probably a bias ahead of this buy the algos to buy this stock because it's a member of the QQQ and it's non-tech. So you got to keep that in mind when you're trading, those members. There's about 20 of them. Obviously, Mondelez, there's a whole pile of them in there. I actually have positioned a couple of these stocks, but keep in mind that when you're getting rotation and we're seeing clearly into non-tech, those members from tech to non-tech, those members of the QQQ that are non-tech are the first ones that benefit. And if you go through the 20 components that are non-tech, they're almost all in the green today. I mean, Starbucks, Walgreens, I'm just going off my head, PepsiCo, have a position in a couple of these day trading positions. But just saying that the rotation here is very clear, and when they're members of the QQQ,
it's hard to
immediately.
To put those glasses on, right, and then say, you know what, yeah, the market's down, yeah, these stocks are getting hammered, but if you look at the arbitrage, you're right, and it's sticking out right in front of you. I'm looking at Bank America and JP Morgan, they're scratched, but anyways, let's get a view from across the pond here. Let's bring Michael Hewson. He's the chief market analyst at CMC Markets. He joins the show about once a month or so to give us a view. Michael, how you doing over there? What do you think of the tech wreck here in the U.S. markets?
Yeah, well, I'm struck by the fact that your markets look fairly resilient at the moment, despite the fact that Google missed last night, Snap missed last week. Meta's probably going to take a face plant later tonight on its numbers, and Microsoft's numbers on the face of it, I actually didn't think they were that bad. Yet, that they're selling off. So I think what's happening, and I could well be wrong, and I stand ready to be corrected, is that your guys' markets are rallying on an expectation that we might see some form of pivot next week, rather than on any earnings expectations or improvement in earnings expectations over the next 3 or 4 months. Could be wrong on that, but certainly the bond markets are telling me that Mary Daly's comments last week could well be slightly more widespread on the FOMC than perhaps was first indicated. I'm not convinced, I have to say. I'm not convinced.
All right. I agree. I mean, we've been hearing about this Fed pivot, and maybe that's going to be the predominant factor moving forward. But let's talk about I heard that you may be the next prime minister or something. Like they changed.
Give
like
them 45 days. 45 days.
Yeah. How long can the new one stay in there? Boy, you guys got a lot of turmoil going on. Talk about the British pound. Talk about the policies that you talk about a pivot. Oh, we're cutting tech. No, we're not. I mean, you guys got a lot going on there. Talk about what's going on, war effects, and how it could potentially affect our markets.
I think the one thing that we can say is that if we don't like a particular leader, we can get rid of them pretty quickly, unlike yourselves, perhaps.
That is true. That is true.
Whether that's a good thing or a bad thing, only time will tell. But I certainly do say this. I think, judging by the movement in gilt yields that we've seen over the past few days, obviously markets think that Rishi Sunak is the better option. Of course, whether the Conservative Party rank and file think that is another matter, and certainly I think those MPs who've been slighted for cabinet positions think that is another matter. But for here and now, the budget statement has been pushed back to the 17th of November, and yet if you look at the gilt market and the pound, there's been nary a reaction on the back of that. So, but what I would say is that this fuss about the budget, I mean, for crying out loud, they're talking about 45 billion pounds of unfunded tax cuts. Now, you can argue whether or not that's a good idea or a bad idea. The timing of it was lousy, and I think that was more than anything else what did for the last Prime Minister, the fact that it came just after the Federal Reserve had raised rates by 75 basis points and was looking at doing another 150 between now and the end of the year. Whether that continues to be the case, obviously, is open to discussion, and we'll know more about that perhaps in just over a week's time. But, when you talk about fiscal black holes of 60 billion pounds and you're doing an energy price bailout of around about that amount and gas prices have more than halved, you're talking about a fiscal black hole that may or may not exist. And that's I think that's the big conundrum that markets here are wrestling with, notwithstanding the turmoil in the gilt market. So for me, I think that this was a little bit of a self-inflicted crisis, a crisis of bad PR over substance. And ultimately, the last thing that this country needs now is tax hikes and spending cuts, because you certainly do neither of those things in the middle of a potential recession or an economic slowdown, which is essentially what this country is facing. But unfortunately, this is where we are right now, and it's not a particularly great place to be.
Of course, some of the biggest concerns are in energy, and there's been talks, all throughout summer about natural gas, but it doesn't seem like it's gone really into crisis mode. What do you think is happening here, Michael?
Well, I think we're helped by the warm weather here in the UK. It's 20 degrees here in London, and we're almost in November. Now, how often can you say that in the winter? I've been in New York on occasions where it's been 20 degrees in November, but then overnight it drops to below freezing. We're not going to get that here. So gas reserves here in Europe are very, very high, around about 94, 95%. And that's why you've seen gas prices fall precipitously over the course of the past few weeks. We've got a surplus of gas. We've got nowhere to put it. And ultimately, it's just building up in tankers offshore. So that's why gas prices are lower. The bigger problem, I think, is not so much this side of 2023. It's in January and February next year. Does the weather turn cold? Do those reserves fall off quite quickly? Because Putin's made it abundantly clear Nord Stream 1's not going to reopen. Nord Stream 2's not going to reopen. So the big test, I think, is yet to come. And that is January next year, when those reserves, which are currently 94, 95% full, start to drop below 30 or 40%.
Looks like the chat is saying 68 degrees Fahrenheit. That's warm. Man, don't want to be there in the winter time.
68? That's shorts weather.
Yeah, it's 20 degrees Celsius.
68 to 70 is shorts weather. So I just staying along this theme here, the energy. So what, your energy bill, I mean, is it like in a fast market? I mean, you talked about it increased a crazy amount. I think we were talking to you about a month ago. So are they going to end up owing you money this month? Or let's talk about the volatility there.
I hope so. Well, the energy price cap is set at £2,500 for the year. So that's going to last until the end of March next year. The current government will then review it in light of where gas prices are likely to be. It's certainly at current price levels may not be anywhere near as much as people think that it will. I already got my first monthly rebate on my energy bill of £66 a month, and I will be getting another £66 in November and another £66 in December, and I pay £143 a month, but I'm on a fixed rate, which is fixed for 3 years, which I fixed last year. So I hedged my hedged my energy quite nicely. Thank you very much.
I want to talk about what's today, Wednesday. I want to talk about Monday in the markets. I mean, this has just been a bizarro week. I mean, you have the FX side, the Chinese markets. I mean, just getting absolutely pummeled, and for a long time, I mean, that would be bad for the U.S. market, right? Kind of following. And instead you had the opposite. Is this just like a short term phenomena that's happening here? I mean, it just can't be sell the world and buy the US here. Give us I mean, that seems so long ago. We're looking at Microsoft and Google Day, and the S&P is continuing to leak. But talk about that. Is that just a quick phenomena, or could it be true?
Well, I mean, you look at China, and I think, given what's happening over there, I think China's becoming uninvestable. Unless you see a significant change of strategy from President Xi, this zero COVID strategy is likely to hobble China's domestic economy, let alone its export capability, for quite some time to come. Why would you want to invest in China? And I think that's the elephant in the room at the moment. I don't think markets are fully pricing that. What we're seeing at the moment is very much, I think, a technical rebound. It's interesting to note, if you look at the S&P, if you look at the NASDAQ, we're retesting the 50-day moving average. Now, that's not to say that we can't go further higher. I think there's certainly potential for us to do that, most definitely. But the test of 3,500 on the S&P, that's a nice rebound. I think we could potentially go back to 4,000 in the short to medium term. Does it mean we're out of the woods? I don't think it does. And I think that for me is the big test. Also, Apple's numbers later this week. Apple's been one of those stocks. I love Apple. I think it's a great company. You know, it's a cash machine. But ultimately, the fact that Apple is offering discounts on iPhones in China, what does that tell you? They're concerned about demand. Elon Musk, again, cutting prices on Teslas in China. What does that tell you? He's concerned about demand. So I think that could be the catalyst for a meltdown. We're not seeing yet US markets, and I think that's largely on the back of this so-called Fed pause, pivot, whatever you want to call it. But ultimately, I don't think we're out of the woods yet. But, you know, with these markets, it's so difficult to tell. I mean, these markets are the hardest, I think, that I've seen them in the last 30 years.
Well, Michael, we have a CEO that's always talked about Tesla and being in, he used to say that you're going to see Tesla in every parking lot. I would love to get your perspective across the pond, how the EV demand is going.
EV demand is picking up. I'm not sure it's the silver bullet that people like to think it is, because for me, I think here, if you compare what it costs to recharge a Tesla over here to how much it costs to put gasoline in your car, it's actually cheaper to put gasoline in your car. And ultimately, where is all this cobalt, lithium, and copper going to come from to build all of these electric cars? You know, for me, I think Tesla could be the old Betamax or VHS Betamax story. I think the future is in hydrogen cars, because there just isn't enough rare earths in the world to create the number of batteries you would need to replace all the petrol cars globally. I just don't see where that growth is going to be sustained. I just don't. And I'm probably going to get a lot of hate mail for that, but you know, hey ho.
Hey, that's it. That's all being part of Benzinga's pre-market prep show. But let's just talk about, you know, the rest of the, you know, the earnings season. We got the big guns here. We still got Apple, you know, on deck. Meta, which had just an incredible day yesterday. Now giving some back today. So you're going to stick with it. It's like the reason we've had this rally is because of a potential Fed pivot, and like, so these earnings. I mean, the bank earnings were good. That was a nice surprise. So that's what are you looking forward for the rest of Q3 earnings season?
Yeah, I mean, bank earnings were a surprise, but were they really? I mean, I think what I was struck by with bank earnings was actually the low levels of loan loss provisions. And ultimately, if you're lending money at 5% and offering your depositors 0.5%, you ought to be making money. I mean, you're not just making money; you're ripping your depositors off. So, you know, for me, the banks should be making money. You know, as you go forward in terms of tech, I think for me the biggest concern, I think, is very much if Apple misses. Well, how does the market react to that? Amazon, again, you know, they've got a diverse business model. I think they'll survive no matter what, whether it be streaming, whether it be Prime, whether it be cloud or what have you. They've got a part of their business that was probably always likely to do well. But for me, I think it's really about earnings growth, and earnings growth is likely to be an awful lot weaker over the course of the next 6 to 12 months than markets are currently pricing. And I don't think that shoe has dropped yet.
All right, now I'll ask you about Airbus, because we don't get to see too much from this company. And of course, Boeing today coming out with some really bad EPS. How do you see travel across the pond?
Yeah, I mean, I'm not so concerned.
Oh, looks like we lost audio there for a second. There you go. You're back, Michael. For a second, we lost audio. Go ahead and re-speak that.
No, I don't know what you heard there. I mean, when looking at Airbus shares, and you know, for me, they look fairly decent. Demand orders are looking fairly stable. I think the problem that you've got with Boeing is I still think that you've got that hangover from the 737 Max. I mean, I still am very reluctant to even get on one. Having said that, I went to Iceland a few weeks ago on one, and it was perfectly fine. But I think, with airfares the way that they are, with cost of living becoming squeezed, I think airline orders are likely to be fairly constrained for a while. So Airbus shares are near their highs, around about 110 euros. Look a little bit toppy at current levels. I think there's potential for them to probably roll over a little bit in the short to medium term.
Well,
We've
we'll
been on the
definitely.
line.
Go ahead.
You got anything else, Mitch or
No,
Dennis?
you're good. You're good, Joe.
All right, we've been on the line with Michael Hewson. He's the chief market analyst over across the pond at CMC Markets, giving us a good view on the markets. Always appreciate having you on, and we'll get you
Always
get you
pleasure,
back
guys.
soon. Wrap up your day, get home, go get some dinner.
Have a good
Thanks,
one,
guys.
Michael. Good
Cheers.
to have you on. All right, take a peek into the market. How we doing, Joe? We still leaking?
Yeah, we did. They still got their foot on the Microsoft and Google pedal here right now. So just a slow leak towards the pre-market low.
Okay.
Really, nothing stands out to me at that 24 and a quarter. That's your current pre-market low. So that little rally we had for 430, that's starting to fade. Triple D, what are you seeing out there in the order flow?
Oh, it's a lot of rotation. We're still seeing it. We're going to talk about this. I mean, the word of the day right now, at least, is rotation. Half the stocks are green. And you come in, you see it's down 35 handles, like everything's getting hammered. We're not in the everything market anymore. We were in the everything market a couple of weeks ago. We're not in the everything market. We're in separation. So I'm looking, food stocks are all trading higher, like Costco, Target's up. Consumer staples are trading higher. The banks are still green. The energy stocks are still ripping, seem to go up every day. I've missed that trade. Utilities are green. And then the red stuff is higher PE and tech. It's pretty much across the board. Boeing went pretty heavy red here now.
Yeah.
So it's dragging down where some of these airlines were trading up before. They're actually turned to the red here now too, just following Boeing's lead. So lots of rotation. It's going to be the word of the day. Not seeing any sniff of really buyers coming into the queues or into tech. It's
Not
being
yet.
completely ignored or potentially even sold still. But we are still seeing buyers in other stocks. So the rotation is still very prevalent.
You want
Let's
to
go
see
to
an
one-
interesting chart here?
I do.
Have you looked at Walmart lately?
Rotation. I
Look
mean,
at
there you
this
go.
thing.
This
Look at
stock's
that.
near all-time highs.
Yeah.
Well, I guess the ways off.
Not
160,
$20
I forgot.
off, but still, if I got to get rid of these too many lines here. But
Yeah.
I mean, retail beat up, right? Let's go after some retail here. I think Macy's had a good day yesterday too. So Macy's, let me bring up the letter M. Yeah, that's had a good couple days. Down 6 cents here, and since I gave my upgrade to Kohl's, it's had a nice move over 28. So, Mitch, you wanna cover some more earnings?
I mean, all these stocks are so beat up. Again, it's the same stuff getting bought. We were picking on the drugs yesterday, but the retail is a good example too. They're lower PE. I mean, the Macy's PE has been low for a while. They're selling high PE and buying low PE. That's what's happening today. But they've been buying low PE for a while. So PEs matter right now, and that's what is hot. Is what has a low PE. Energy stocks, all low PE. Drug stocks, low PE. Retail, which has come back a little bit here, is starting to come back here, is lower PE.
GARP,
so it's not
would you say?
rocket science here. Those relationships matter, understanding that this isn't just an energy rally. The drugs are participating too. And drugs and energy have nothing to do with each other, but they're linked in one thing. They both have low PEs, and that's what's working.
Would it be GARP plays, Dennis?
Not really GARP because
no growth. Just
the
value.
growth isn't there on a lot of these. So I would just say it's just a pure low PE thing. GARP, what Mitch is making a good point, is growth at a reasonable price. I kind of am always a GARP investor. Google was one of my major GARP plays the last decade because it was growth at a reasonable price. And I mean, it's still kind of growth at a reasonable price, although they're not growing as much right now. And that's, the issue. But I don't really see it so much GARP. I just see low PE is starting to come into favor. I mean, here's one, Carmen, Rio. I mean, it's again, when you get into commodities and getting into energy plays, they're cyclical businesses. So you don't want to get suckered sometimes by the low PEs. Like we go to win in Cleveland Cliffs and say, oh, it's low PE. You want to be in that. But at the same time, it's very cyclical. And energy can be cyclical as well. So we have to be careful there. But drug stocks are not cyclical. So those are just pure, and that's why they're probably getting bought more than anything because they're looking for low PE like a Merck. like a Gilead, like, Johnson & Johnson is not low PE, but it's getting thrown into there because it's got the consumer staple component too. It's always had a little higher PE. That's the stuff they're buying right now.
They bought the Cleveland Cliffs yesterday, Dennis.
They did, and it's low PE too. They did buy that dip on Cleveland Cliffs. So, is it safe to continue and say, hey, this is going to get all back? It could. Again, because those earnings are so cyclical, I don't want to get caught in the value trap. Microns always look like a cheap PE too. But again, cyclical. It goes to down, DRAM starts going down, and then all of a sudden, you're looking at negative earnings, and you're like, holy cow, why did I pay for that? So you got to always just watch, the businesses. But the drugs are not cyclical. I still like the drug stocks on pullbacks.
Let's go to an upstock here. Visa came in with earnings. Let's talk about them. Q4 EPS at $1.93, beating the $1.87 estimate. Sales at $7.8 billion, beating the $7.57 billion estimate. Visa raising the quarterly dividend from 39 cents to 45 cents a share. Also announcing a new 12 billion share buyback plan.
200 got there on the pop, failed, pulled back. I think the Bulls, they want to take control of this thing. They got to get this over 200 and hold. Pretty nice move, still maintain the green. Be more inclined to try and be a buyer in the lower 195 handle. That would be the top of yesterday's range. Really nothing in here between 195 and 200. So pick your target there. Triple D, any thoughts on Visa? Oh, you own MasterCard, right?
I still have MasterCard. I sold most of it back earlier this year. I sold around $350. I've had it for a long time. I have a little legacy piece. This was one of my best holdings. My average cost basis is $16, but I was just looking at the MasterCard PE and thinking we're going to recession. I was thinking that actually MasterCard could go down to the 200s, which it has touched into there. It's coming back here now. I'd be a seller of Visa and MasterCard on the rallies. I do think they're solid businesses, but they're just not, the valuations just aren't that cheap on these things. And again, we're in a valuation market. I'm moving my portfolio from higher valuation to lower valuation, to lower PE stuff.
All right, let's keep it going. We got a couple more that I want to get touching here. So let's do Spotify Q3 EPS missing at $1, missing the 86-cent loss estimate. Sales coming in at $3.04 billion, beating the $2.92 billion estimate. Total monthly active users at 456 million, up 20% year over year. Now, this reporting from Reuters, Spotify CEO Daniel Ek says that price increase is something that we would like to do. So keep that in mind. It looks like Spotify would be increasing their price probably. Who knows? Maybe this quarter coming up, or could be going into the next year.
Doesn't fit the bill of a low PE stock, I'll tell you that much. With that being said, I'll throw the question. I'll pose the question to you and also to the chat. There has been a significant rally in a lot of nosebleed valuation stocks here. Everything rally. It was the everything rally, really. Mm-hmm. You're getting a pullback counter move here because of Microsoft. Do you think Spotify finds a buyer at 90, Joel?
I was just looking at the 50%. I came in right at 88, and it dipped there, and they bought it. So I think you're going to have. I don't think you're going to get a chance at 90 today. Yeah. Just the way this chart.
I think the dip's getting bought in a stock like this.
Yeah. I mean, this is a tough bar here, right? From Monday. So gets back above Monday or Tuesday's low, 95.08. Then the bull, that's still a couple bucks away to get it. But then after that, challenge green. I just can't, 90 is a good number to look at, just a nice round number. Just the way this 15-minute chart looks, it looks like they already bought the dip. S&P's starting to rally a little bit. Mitch, what's our next? I
feel like this. I still feel like this S&P is going to go green today, but we will
wait and see. Spotify. The one thing that I will say on Monday, it did have 3 times the average volume, so it looks like something was going on there.
Yep.
Just pointing it out there. Enphase Energy. Let's go to Enphase here. Their EPS coming in at $1.25, beating the $1.08 estimate. Sales at $634.71 million, beating the $610.65 million estimate. They raised guidance. They see Q4 revenue at $680 million to a high end of $720 million versus the $660.21 million estimate. Enphase.
stock just fires on all cylinders, it seems like, all the time. Every time we get a pullback in this thing, it feels like just another buying opportunity again. With that being said, what's a 50% retracement move? 324 down to 247. Oh, that's some hard math there. 53 and 24, 75. $37 up from 234 will carry you right around into here.
Yeah, and
it's stalling
also,
out at the 50%.
yeah, and also you got wow, you spiked up to 87, 89 in the after hours, but I'd be right now, if I had this thing long, I'd be like, can I get this? Can I get my sale off at 285.38? And there's a little gap between that and 286.38. Got to hop here in a second. I just want to bring up one chart here. Dennis, have you seen what Snap's done?
I'll come right back. I did.
Snap back.
Snap back. The market went into full buy the dip mode in the last couple days. I don't know if that's going to continue today, but Mitch, you're right. It went full buy the dip mode.
Well,
so
it all started with the Wall Street Journal report on Friday. The talks of potentially the Fed slowing down in December.
They were looking at what has been dipping, and
they jumped it. They jumped the gun.
Use the examples on some of these earnings plays. Even anything that was dipping, they were buying it, which makes that mentality has been holding true. We haven't had a trade yet, so you'll wonder if they don't do it in Microsoft and Google here too. There's still that possibility that they might come in and buy this dip, but they're buying dips.
All right, guys, I'll let you guys finish it up, and everyone have a great day. Great show today. Way to go, Mitch.
Have a good one, Joel. Joel's getting out of here. I definitely will be
too.
watching. Go ahead, Dennis.
Here.
I know there's a lot going on.
Go do
what you do best, my friend. Go back into the trading. And one thing that I will point out is there's still some more earnings reports. Of course, we had Thermo Fisher getting hit there. You guys can take that out. TMO. There you guys see they beat, but still getting hit. And my call on the Skechers. What do you guys think about the Skechers call? Not a bad one there. Skechers coming in there and getting hit hard there, down from 36 down to 31s. Yesterday it did make a green move, so it was hard to kind of stay in that outlook. But Skechers missing here on the EPS. They beat on sales, but lowered guidance. See Q4 sales at 1.72 billion versus 1.77 versus the 1.79 estimate. So missing there on their estimate. It's like Skechers getting hit. And full disclosure, I don't have a position. I just, I looked into different short reports that were out there. We had Spruce Point Capital on my show, Stock Market Movers, and we were looking into this, and it just seemed like, especially with the warnings that were out for Nike, I think this still has room to come down. I think this eventually gets down there towards $28, $26, $25. We'll see what happens there in Skechers if it can keep breaking down. All right, that's going to do it for me. Like always, guys, hit the thumbs up. We'll keep going right here. Of course, if you guys enjoyed Pre-Market Prep and everything that we have to offer you, we truly appreciate the thumbs up. It seems like there's not enough of you guys that are watching that are hitting the like. This really shows us, Benzinga, that you guys want to keep Pre-Market Prep here and absolutely free. That's what it's all about. It doesn't take much. It takes a second. Just take that 1 second, hit that thumbs up, and show us that you guys appreciate Pre-Market Prep. Now up, we got live trading with Benzinga. Lord Ryan, Zunaid, and I will be getting into it, of course. Zunaid killed it yesterday. I actually had a no trade day yesterday. It seemed like I got caught right out the gate. A big bullish move. I didn't want to catch some of these kind of pullbacks because I just did not know where we were going. Took a day off, but I'm ready to get back to it. Let's get right over to live trading. That's coming up next. Like always, later today, we got great show for you guys. Don't go anywhere. We're going to have, of course, after live trading, we'll get to Benzinga Live with AB. And later after that, I got Stock Market Movers. And also, we'll be having a big webinar with Humble Trader. A day in the life of a day trader using Benzinga Pro. Don't miss that. That's going to be later on tomorrow on Thursday. So don't miss that. That's going to be a great webinar with Humble Trader. See you next time, team. Keep it going. Rise and shine. It's time to get after this market. I'll see you guys over on live trading.